Welcome to the Warren Method, the go-to channel for unlocking the wealth-building secrets of Warren Buffett, the Oracle of Omaha. Today's deep dive explores a powerful topic: how Warren Buffett makes billions with B2B strategies, and yes, you can copy them. This 45-minute episode unpacks how Buffett uses business-to-business, or B2B, strategies to build his $900 billion empire at Berkshire Hathaway. Perfect for entrepreneurs scaling startups, small business owners aiming to boost profits, investors seeking opportunities, or anyone fascinated by Buffett's genius. The video covers what B2B is, why it's Buffett's secret weapon for core strategies with real-world examples from companies like BNSF Railway and Lubrizol, a full case study, a comparison with other investors, B2B trends for 2025, and an extended Q&A with actionable steps. Mistakes to avoid are included to save time and money. Drop a yes in the comments if ready to learn how to think like Buffett. Subscribe to the Warren Method and turn on notifications for weekly deep dives. Here's a quick story. Picture a young Warren Buffett in 1930s Omaha, delivering newspapers, saving every penny. By age 11 in 1941, he bought his first stock. Decades later, he turned that hustle into billions by mastering B2B, businesses that sell to other businesses. Let's uncover how. B2B, or business to business, involves one company selling products or services directly to another company, not to individual consumers. That's B2C, business to consumer. Examples include a factory making parts for Tesla, a software company licensing tools to Amazon, or a logistics firm hauling goods for Walmart. These deals power global trade behind the scenes. Why does Warren Buffett focus on B2B? Stability, scale, and massive profits. As of October 2025, Berkshire Hathaway, Buffett's holding company, is valued at over $900 billion, with most revenue from B2B subsidiaries. BNSF Railway moves freight for industries, Lubrizol produces chemicals for manufacturers, McLean distributes goods to retailers, and Berkshire's reinsurance arm insures corporations. These businesses generate billions annually. The global B2B e-commerce market is projected to reach $36 trillion by 2026, compared to $7 trillion for B2C, 5 times bigger. B2B deals involve huge contracts, long-term partnerships, and recurring revenue, unlike consumer trends that fade fast. Buffett calls these businesses economic moats, competitive advantages like unique technology, exclusive contracts, or scale that keep competitors out. In the 1960s, Buffett took over Berkshire Hathaway, a failing textile company. Textiles had low margins, so he pivoted to B2B industries like insurance and manufacturing. Influenced by Benjamin Graham, author of The Intelligent Investor, Buffett targeted undervalued assets with strong fundamentals. B2B companies like utilities or suppliers are ideal, essential, with predictable cash flows, thriving through recessions and crises. In 2008, during the financial crisis, while markets panicked, Buffett doubled down on B2B, buying stakes in companies like Marmon, a conglomerate of industrial firms. B2B businesses recover faster because they're critical to supply chains. Buffett's quote, "Buy businesses so wonderful that an idiot can run them because sooner or later one will." That's the power of B2B, reliable and built to last. Comment below. Did you know Buffett's wealth is mostly B2B? Write yes or no to join the discussion. Strategy 1 is value investing applied to B2B, Buffett's core philosophy from Benjamin Graham. Buy companies below their intrinsic value and hold them forever. In the 1970s, Buffett shifted from stocks to entire businesses, especially B2B. A major win was the 2010 acquisition of BNSF Railway for $44 billion. BNSF A B2B powerhouse transports coal, grains, and goods for companies like Amazon and agricultural giants. Railroads have massive moats. Building a new network costs billions, locking out competitors. In 2024, BNSF generated $23 billion in revenue, a top earner for Berkshire. Buffett uses discounted cash flow to pick winners. Future earnings are estimated, discounted to present value, and bought when the market price is low. B2B companies like BNSF are ideal due to predictable cash flows. Industries need rail transport in any economy. Another example, in 2016, Buffett acquired Precision Castparts for $37 billion. This B2B firm makes aerospace components for Boeing and Airbus, with moats like proprietary technology and long-term contracts. Even during the 2020 COVID travel slump, its contracts ensured steady revenue. In 2009, Buffett invested $3 billion in Dow Chemical's B2B operations, buying preferred stock during the financial crisis at a discount, securing high returns. This shows his skill at spotting undervalued B2B assets when markets are scared. To copy this, entrepreneurs can find undervalued B2B opportunities, like partnering with a struggling supplier with strong assets. Investors can target B2B stocks like 3M or Caterpillar at a discount. Steps: 1. Research industry's 4 hidden gems using Yahoo Finance. 2. Estimate value with Excel or online calculators. 3. Negotiate deals or investments. 4. Hold long-term. Avoid chasing hyped stocks. Buffett skipped the 2000s dot-com bubble for B2B reliability. In 2025, focus on B2B sectors like green logistics or industrial automation, where demand is surging. Comment: what's a B2B company you'd invest in? Share ideas below. Strategy 2 is leveraging insurance, float, to fuel B2B investments, a brilliant Buffett tactic. Float is money insurers collect from premiums before paying claims, free capital if risks are managed well. In 1967, Buffett bought National Indemnity, a B2B insurer for businesses like trucking firms. Today, Berkshire's insurance operations, including Geico and reinsurance, hold over $160 billion in float, invested in B2B companies. In 2011, Float funded the $9 billion acquisition of Lubrizol, a B2B firm making industrial chemicals for oil and automotive industries. Its moat? Patented formulas competitors can't replicate. Lubrizol's profits flow back to Berkshire, creating a cycle. Float works like this. An insurer collects $10 million in premiums but pays $8 million in claims years later. The $2 million gap is invested in B2B businesses, earning returns while covering risks. Berkshire's insurance arm often profits from underwriting alone, before investment gains. In 2009, Float funded a $3 billion investment in Dow Chemical's B2B specialty chemicals during the financial crisis, securing high-return preferred stock. In the 1970s, Float from National Indemnity bought smaller B2B businesses like See's Candies, which has a B2B wholesale arm, scaling to billions over time. To copy, entrepreneurs can create float by negotiating upfront payments from B2B clients, like 50% deposits for consulting contracts. Steps: 1. Build predictable revenue like subscriptions. 2. Reinvest surplus into growth. 3. Keep reserves to avoid overleveraging. 4. Study Buffett's shareholder letters, free on Berkshire's site. Avoid reckless spending. Buffett sticks to low-risk B2B. In 2025, with rising interest rates, float-like strategies shine in B2B sectors like SaaS or renewable energy logistics. Start small, offer B2B services on Upwork and reinvest earnings. Like this strategy? Hit the like button. Strategy 3 is decentralized management with a focus on quality over quantity, allowing Buffett to run a $900 billion empire efficiently. Berkshire owns over 60 subsidiaries, mostly B2B like Marmon, industrial manufacturing, McLean, supply chain for retailers, and Fruit of the Loom, B2B wholesale clothing. Buffett sets the vision but gives CEOs autonomy, saving time and attracting top talent. In 2002, Berkshire bought Fruit of the Loom for $835 million post-bankruptcy. Its B2B wholesale arm, supplying retailers like Walmart, was kept intact with trusted management. By 2024, it generated $700 million in revenue, thanks to relationships and efficient production. Compare Buffett to hands-on CEOs like Elon Musk, who controls details at Tesla. Buffett's decentralized style scales B2B portfolios. His quote, "Hire well, manage little." In the 1960s, he tried micromanaging Berkshire's textiles and failed, learning to trust stellar managers for B2B firms like Nebraska Furniture Mart. To copy, hire skilled teams and delegate. Steps. 1. Screen for integrity and competence. 2. Set clear goals without meddling. 3. Focus on high-quality B2B clients. 4. Say no to mediocre deals. Avoid overexpansion. Buffett rejects 99% of opportunities. In 2025, B2B niches like AI tools or sustainable supply chains reward quality management. Focus on one high-value client to build credibility. Comment: would you delegate like Buffett? Share thoughts below. Strategy 4 is diversification within B2B to spread risk and maximize returns. Buffett diversifies strategically, staying within his expertise. The Marmon Group, acquired in 2008 for $4.5 billion, is a conglomerate of over 100 B2B businesses, from railcar leasing to medical equipment. Each serves different industries: railcars for chemicals, cables for telecom, tanks for energy, generating over $10 billion annually. Diversification reduces risk if one sector falters. Buffett's quote, "Diversification is protection against ignorance, but you don't need much if you know what you're doing." He diversifies enough to hedge risks while staying in B2B. Berkshire's energy division, BHE, serves B2B clients like utilities with renewables, gas and transmission, ensuring steady cash flow. To copy, partner with multiple B2B clients in related niches, like supplying restaurants and caterers. Investors can consider B2B ETFs like XLI, Industrial Select Sector SPDR Fund. Steps. 1. Identify 2 to 3 complementary B2B niches. 2. Build diverse client relationships. 3. Monitor performance to balance risks. Avoid over-diversifying outside expertise. In 2025, B2B sectors like cybersecurity and green logistics are hot. Offer related services like cybersecurity audits and compliance consulting. Comment: what B2B niches would you diversify into? Looking to 2025, B2B remains a goldmine. 3 trending sectors align with Buffett's approach. AI for businesses. Companies like Salesforce invest billions in AI tools for B2B like CRM automation. Partner with AI startups or offer AI consulting. Green logistics. With sustainability rising, B2B firms like BNSF pivot to eco-friendly transport. Supply green packaging or logistics tech. Cybersecurity. As cyber threats grow, B2B cybersecurity booms. Offer compliance audits or partner with security providers. Apply Buffett strategies. Use value investing to find undervalued B2B opportunities, leverage float from client deposits, Delegate to quality teams and diversify smartly. Steps. 1. Research niches with Google Trends. 2. Test a small project like B2B freelancing on Upwork. 3. Reinvest profits to scale. 4. Build moats like exclusive contracts. Avoid chasing trends without moats. Here's an extended Q&A to make this actionable. Do I need millions to copy Buffett? No, start small. Offer B2B services like consulting on Upwork or partner with local businesses. A freelancer offering B2B social media management scaled to $10,000 per month in a year. What's the biggest risk in B2B? Economic downturns, but moats like contracts protect. BNSF thrived post-2008 because railroads are essential. How to find undervalued B2B opportunities. Use Yahoo Finance or talk to local businesses. Look for struggling firms with strong assets. Best resources? Read Buffett's shareholder letters, free on Berkshire's website, The Intelligent Investor by Graham, or watch The Warren Method. Buffett's B2B strategies, value investing, float, decentralized management, diversification, are timeless. In 2025, apply them to AI, green logistics, or cybersecurity. Start small, think long-term, build moats. Smash the like button, comment your top takeaway, and share with a friend in business. Answer this poll. Which strategy was your favorite? 1, 2, 3, or 4? Subscribe to The Warren Method and hit the bell for more Buffett deep dives.